Erik Lueth is senior regional economist for RBS and a former senior desk economist for South Korea at the IMF. So you're going to know the thinking better than most. On hold for a year now.
Yes, and I think it will probably remain on hold for longer, definitely until the end of this year. And I think that is just a function of the global economy being relatively weak, huge downside risks. On the other hand, you know...
They could cut further, though, couldn't they? I mean, really, at the moment, inflation doesn't seem to be that much of a threat.
Yes, but inflation, you have to be very careful. The headline number is at 2.5, very low. But that's really because of one-off measures that were taken in March.
Cutting subsidies, wasn't it?
Subsidies given to households. And so this will keep the headline figure low for a year. But the underlying pressures are closer to, let's say, 3%, about in the middle of the range of the target.
So next year we get the base effect, and that would, of course, see that
exactly,
as well.
Exactly.
So what about what's going on in Korea right now? You know, how is it being affected by the tumult in the world economy?
I would say that, and that holds for Asian economies, they're holding up relatively well. Obviously, risky assets are being sold off, including Asian currencies. Korea is always one, together with Indonesia, which gets off-sold more heavily. But, you know, reserve levels are at very healthy levels. We don't see bank deleveraging affecting credit growth. So I would say that, all in all, they're holding up well. Exports are pretty flat in these open economies, and that's weighing on growth. So we are seeing subpar growth this year. One reason we won't see interest rates go up or anything of that sort.
Household debt, though, is a bit of an issue, isn't it?
Yes, I think, and it continues to feature prominently. Actually, household debt already was very high, at about 150% of disposable income. That's higher than it was in the U.S. at the outset of the subprime crisis, and it continues rising.
Erik, what about overall? I mean, you know, of course, the People's Bank of China coming out and surprising everybody with that interest rate cut. You know, we've seen also interest rate cuts in Australia. We've got pressure for more easing on a lot of these central banks right now. What do you make of what's going on? What sort of picture is it painting of the state of play when it comes to the world economy?
I think, I mean, 3 months back, our focus was still on inflation, I would say. I would say we have seen a clear shift now. Our focus and policymakers' focus is on growth. That seems to be the key risk right now. I think tail risks have increased incredibly, particularly in Europe. So that's how I would see the world. Having said that, our baseline, and most people's baseline, is still one where the U.S. would grow, and also Mr. Bernanke's baseline is one where the U.S. grows above 2%. China still grows at 8%. And
that will depend on the data we get this weekend, because I mean, people are talking about the timing here being critical, doing it before we get this raft of information about the state of play when it comes to China.
But, I mean, the Chinese authorities still have huge firepower, both fiscally and monetary-wise. Yeah. And so, you know, we don't really see growth go below 8% given, you know, the leadership transition. So we are relatively confident about that baseline. And in that baseline, we actually don't see any central bank cutting rates this year, with the only exception of India, but that's very much a homemade problem. That's really not the global economy. On the contrary, you know, Thailand, people are talking about interest rates hikes this year. We don't see that, but you know, so we don't see really a lot of people following the People's Bank of China.
But it's you know, as you say, a year ago we were looking at inflation being a threat, but that's certainly not the case at the moment, is it?
Yes, I would give you that. That's why basically we are staying on hold with interest rates for an extended period.
I just want to briefly talk to you about India as well. I mean, you can cut interest rates, you can do all sorts of things. That helps out the corporate side of things. It's the fiscal side which needs addressing there, and also policy paralysis which needs addressing it for India to carry on growing, and if they want to put the onus on growth.
Yeah, I mean, we keep talking at RBS about the triple deficits. It's basically the external, the fiscal, and the policy deficit. And then you have all those corruption cases which have led to a change of the rules of the game, which is very good over the medium term, but it has really increased uncertainty. Companies are telling us that they don't get things done as quickly as they got them done. That's one reason why investment has dropped so starkly.
Well, also they're concerned about retroactive legislation, such as the tax issue, which of course is going to and fro, and they're flipping and flopping over that one.
Yes, yes. But I mean, if you look at it, really, the widening external deficit is a direct function of the fiscal deficit, which is not getting under control, and that's in stark contrast to other deficit countries like Indonesia or so in the region.
Erik, thank you so much for your time. Yeah?